Akshi Federici will be speaking on blockchain Propels Fintech's new era and VC perspectives. Let's hear it for Akshi.
Cool. Thanks, guys. Hi, good afternoon. Hope everyone's enjoying the conference. I'm really looking forward to the pitches tomorrow and judging them. ETH Denver is one of my personal favorite events. And today I wanted to share with you our view and our thesis on how blockchain is going to really propel fintech and how we don't necessarily see those two as competing or separate, but more so converging. So with that, hello again. My name is Akshi Federici. I'm a partner at Kraken Ventures. Three partners, we kind of spun out of Kraken Ventures, out of Kraken this year and launched Kraken Ventures. Before that, I was at Kraken for 2 years, leading BizOps, and then also helping Kraken with our IPO readiness and audit readiness. Prior to that, I was at Status. Not many folks here may remember Status, but it was one of the first applications of Ethereum on mainnet. And before that, just like several folks that I keep running into at this conference, I started off in the Ethereum space with Consensus in Brooklyn. I launched the Consensus Academy program that certifies developers on Solidity globally. And that was right around in 2017. Prior to that, I was in traditional financial services at BlackRock in New York and worked with the Boston Consulting Group, mostly for large asset managers, hedge funds, pension funds. So that's a little bit about my background. And I don't know if people are familiar with Kraken Ventures, so I just wanted to highlight that we are not a corporate VC, so we are not like PayPal Ventures or Amex Ventures or Coinbase Ventures. We do have the brand name with Kraken, but we are independent, which means that from a strategic perspective, we are a traditional venture fund focused entirely on returns. Our focus is still a little bit unique in this space in that we do both fintech investments and also crypto investments, and hence the topic for the talk today. Another thing that I wanted to highlight was that our relationship with Kraken really helps our portfolio companies with respect to product integrations, commercial opportunities, and potentially even exits like acquisitions into Kraken. Of course, as a venture fund, we have the advantage of having access to the 3,000 plus employees of Kraken across 70 countries globally in terms of deal flow. So that's actually quite special. Just a little bit more about our focus in terms of verticals and stages. We focus on the seed stage primarily with selective follow-ons into Series A. I'll come back to the verticals in a second, but we're a global fund. The team is truly global. I'm based out of New York. Another partner, Kirill, that a lot of people at the conference know, is based out of Hong Kong. And then our founding partner is based out of Austin, also covers the West Coast. We do have a head of Europe, and then we also have another associate with me in New York. In terms of the verticals, as I mentioned, we do both fintech as well as crypto blockchain. In the crypto blockchain space, we are looking at digital economies. So that includes NFTs, it includes metaverse, gaming, et cetera. I'll talk about that later as well. Web3/DeFi. To be completely honest, our portfolio is a little bit light on that Web3/DeFi vertical. So if there are any interesting projects working in that space, please do come and speak with me. Enabling technologies is the last one, and that is RegTech, InsurTech, cybersecurity, et cetera. This is a quick snapshot. It's a little bit dated of the companies we've invested in so far. And again, we're a brand new fund. We launched last year. We're launching a second fund this year and hope to do a lot more. But as you can see, we do both equity deals and token deals, and this is a pretty good mix of the 4 verticals that I was mentioning earlier. There are 2 companies that I want to highlight here that are purely, or I would say, sorry, I've lost my voice in the 1 week of the conference, but there are 2 companies I want to highlight here that are very much in the fintech bucket. One of them is Rocket Dollar, and the other one is Pinwheel. So Rocket Dollar is a self-directed IRA provider, and then Pinwheel, if you guys are not familiar with it, is a payroll connectivity API. For all the devs here, we are always, for our portfolio companies, helping them staff up on the dev side. So if anyone's interested in working at any of these portfolio companies, that's another point of interface that would be great to speak about on this during this conference. From a global perspective, as you can see, we've made several investments globally. Chingari is a company that's based out of India. Fonbank is based out of Africa. And then we also have Merkle Science that is based out of Singapore, but has now recently moved over to New York. Before I jump into the fintech and crypto blockchain discussion, I just wanted to highlight and celebrate what has happened in terms of our view of the highlights of last year, right? And these are kind of like the 5 big things that happened from our perspective last year. Some of them are obviously still controversial in our experiments, but I did want to highlight them. The first one, and I'm sure you guys have all read about this and are aware of this, but I do want to tie this into the fintech trend and what's happening on the blockchain side. So the first thing was El Salvador, legalized Bitcoin as tender, and this was, obviously there's a lot of controversy around it. It's still an experiment. The jury is still out, etc. But I do think personally that this was a big move for us, and there will be other such experiments, other countries following in these footsteps. It's also really cool. Like I had a colleague who visited El Salvador recently, and it was actually really cool to be able to speak with him about being able to literally buy a coffee using Bitcoin, and then a lot of the residents, for example, being able to pay taxes in Bitcoin. So that was an interesting development. On the institutional and corporate adoption side, I know that this was a topic last year as well, discussing when this corporate adoption and institutional adoption would happen. And I think last year was really the turning point of this. And from my perspective, I break that down into 4 buckets of adoption. So the first one was clearly the crypto-focused, the crypto-only funds, right? And the AUMs there, I think it was between January and October, it wasn't even a full year, for crypto-only focused funds went up from something like 35 billion to 60 billion. So it was roughly double. But then, also more interestingly, the second wave of adoption that happened was traditional financial institutions. So as you all probably know, BlackRock, BNY Mellon, Morgan Stanley, everyone increased their exposure, opened the exposure to crypto. And it wasn't just banks, it was also foundations. The Soros Foundation, it was also endowments acknowledged and admitted that they had been getting exposure to crypto. A third area in terms of corporate adoption was companies starting to incorporate crypto into their actual product. So MasterCard, Visa, PayPal, et cetera. So, and then the fourth thing that's I think incorporated in that is that a lot of this adoption wasn't geography specific, it was truly global. So that was a great accomplishment for us last year as an industry. The third thing was the first, ProShares was approved last year. It was the first ETF in the United States. Of course, then there were others that happened as well: Canada, Brazil, Singapore, etc. NFTs. I think everyone knows that this is going to be a trend that's here to stay. We are seeing a lot of activity on the metaverse side, on the gaming side, that's starting to develop this year, and then stablecoin supply. So very quickly, at a very high level, I'm sure everyone is familiar with the word fintech. And at this point, it reminds me a lot about the term big data a couple of years ago, right? It's just morphed into this big catch-all. And broadly speaking, in the last several decades, it's moved from defining back-end technology for banks and financial institutions to more consumer-facing fintech and applications. So one of the double clicks that I want to do here is how do you break down consumer finance, right? And so from my perspective, this is the way I was, imagining categorizing everything within consumer finance, right? So on the one end, you have consumption, and then on the other hand, you have savings and investments. And all the companies you see mapped here are coming at this from the pure fintech origins, right? For fintech first. I'm sure you recognize most of these names here. So transfer is on the consumption side. So that's essentially moving around assets, value, and money. And then purchasing, of course. And then there are several applications, there are several tools out there to help track that spending as well. And then on the savings and investment side, there's obviously investing and borrowing. Now, what's interesting in terms of, for me, in terms of the convergence between this and blockchain and crypto is several of these traditional pure fintech players, especially recently, have jumped into the blockchain crypto world and are kind of converging, let's say, top down or in that direction. So obviously, Robinhood, PayPal, Square, several of these are, gravitating towards incorporating blockchain and crypto. But then, I thought it was an interesting exercise to try and remap this page, but with only crypto or blockchain-first companies, to try and get a sense for how that merging is happening on the other end, let's say bottoms up as well. And it's no surprise that there are so many crypto-first, blockchain-first companies out there that are serving every one of these horizontal rows here that was traditionally being served by fintech, right? And so for us as a fund, we are uniquely positioned and we are looking for companies on this map, for example, that we can help then bridge back to fintech, given our personal expertise and sort of, that's what we're really excited about in terms of scale. So you're probably familiar with a lot of players on this page. On the transfer side, of course, it's all the big exchanges, all the small exchanges too, Coinbase, Gemini, and obviously Kraken. Purchasing and tracking of spending in this space, obviously purchasing right now is not necessarily referring to buying physical goods, and that's getting better and it's changing, for example, the El Salvador example with coffee, et cetera. But right now, a lot of the tracking of spending is really portfolio trackers and portfolio management. But there are players in every single horizontal. Investing and borrowing, same thing. On the investing side, I'm sure you guys are at the very least familiar with this from the Super Bowl commercials. But yeah, you have community-based investing applications. You have pure, absolutely public companies like Voyager, et cetera. So there is a lot of activity in this space. And it's really exciting to see how that convergence between fintech and blockchain crypto is happening really from both sides. And we at Kraken Ventures, I know that this is a cliche phrase at this point where people say that all companies in the future are going to be fintech companies or payments companies. And then we truly believe that that's going to be a step further, and going forward, pretty much every payments company is going to be a blockchain crypto company in some way, shape, or form. Like I feel like there are several flavors of this that's going to exist going forward. So within consumer finance, if I double click even further into transfer and purchasing, and just take a step back and think about the history of payments. And I think several of us are obviously aware of this, but a couple of things to highlight here. First, just like pretty much every other industry, when it comes to innovation, the cycles of innovation are always condensing, right? So the earliest innovations, from bartering to coins to paper money, those innovations and milestones were happening with hundreds of, centuries built between them, right? And then the next big, massive innovation that happened with respect to transfers and payments was ACH and SWIFT. And that happened in the 70s. And it's interesting to me personally that ACH, even though it got introduced in the 70s, it really got digitized in the 90s. So it took 20 years, and in that time period, it was literally, ACH was physical magnetic tapes and diskettes. We don't even know what the word diskettes means anymore, but it was physical data storage, right? And so it took 20 years for that to get digitized, but it was definitely one of the biggest innovations in the history of transfers and payments. And then the next wave that happened, which was in the late 90s, was mobile phones. And that's what really brought finance and transactions into people's hands. And so that's kind of what we are seeing right now. But from my perspective, the next wave of this and the next big revolution is going to be stablecoins. And I have a data slide to show where I think that it's kind of supporting this hypothesis. But why would that be the case? Why stablecoins? Even though so much of today's transfers and payments are already digital and they're online, they still have fundamental issues. So for example, last year with COVID, especially with COVID, there was double the amount of transaction volumes with respect to online transactions and online payments. Even if we discount for the fact that that was the spike during COVID, that number is only going to rise. And with that rises online fraud. And just last year, there were 20% extra, or like 20% higher fraudulent cases and transactions online than the year before that. And this is when digital payments already exist. So it's all online, it's digital, right? It's just not blockchain enabled. And so, we're losing $20 billion every year and increasing on just online fraud. The second thing is obviously settlement times, and even if you factor in Swift and whatever else in the back end, it still takes 24 to 48 hours to settle transactions. And then, of course, the last thing is, crypto as we know it and blockchain, it's 24/7, and not just that. With stablecoins, what's really exciting and interesting is that people have access to USD. And this is a whole other, I guess, like political question in my mind in terms of access to USD and what that does from a global access perspective. And so for all these reasons, obviously there are questions, and I think the panel right before this talked about scale, and it talked about just throughput, and those are issues that currently exist, but they're being worked on. And I think that is why this is the trend that's happened in stablecoins, and it's absolutely fascinating where in the last, I think it's a 15-month, it's not even 15-month, I think it's like a 14-month period where the supply of stablecoins has gone up literally from 5 billion to 170 billion. And that is, I think that's just a trend that's here to stay. There are a lot of interesting applications that can be built on stablecoins that can truly transform use cases in the payments and sort of the transfer space as well. So then zooming out, because I want to leave some time for discussion and questions, zooming out from that, what are some of the other areas that we as Kraken Ventures are heavily focused on? We are looking primarily at infrastructure and tooling. And so what that means is, and this is tying back with our 4 verticals, absolutely excited about the DAO space, looking mostly at DAO tooling. We are also looking at infrastructure when it comes to games and collectibles, and also Web3 infrastructure. And then on the traditional fintech side, payroll infrastructure is something that we foresee being disrupted, and there are several companies that are already working on that. And with Pinwheel, obviously, we've kind of indicated that we're interested in that space. And then the last slide that I have here is just about, we get a lot of questions about what criteria we look for when it comes to investing in projects. And it's actually not that different in the crypto blockchain space from a VC perspective as in the traditional financial services or fintech in the space, because it's all the same factors for success. So in no particular order, we look for these kind of 5 things across all of the projects that we source. Product market fit. So what is the total addressable market? What is, what can your customer base grow to? What is their willingness to pay? What is the need that is being served? The second one is valuation. I think that there's been a lot of discussion already at this conference, and we've seen it in the market in the last several months where valuations are skyrocketing, not just, especially in crypto blockchain, but also in tech. And so we're very sensitive to valuations and have some really fun conversations with founders about why valuations shouldn't be the numbers that we're looking at. And then, of course, the team. It's extremely critical for us that it's a team that is dedicated to the project and not kind of spread across multiple different projects. We look for dedicated teams. We look for teams that are ideally repeat founders, and we look for teams that are passionate and deep in the space. And then the go-to-market plan, extremely important. I think that a lot of teams that we speak with, especially at the early stages, at the seed stages, haven't yet formulated someone on the team to really think about go-to-market plan from a BD perspective, partnerships, and also phasing. I think a lot of times when we speak with companies, the phasing is extremely important in terms of immediate, short-term, medium-term, and so on. And the last thing is differentiation. I think I think there's so much great technology in this space right now. And so we always have to constantly think about, is this a product that is where the defensibility is about the tech, or is it about partnerships, or is it about being the first mover? What really is a differentiator? What is the moat? So those are essentially the 5 things that we look at when we're looking to invest. And I guess from my perspective, as closing remarks go, I think a lot of times I speak with other VCs that are only focused on fintech, or they sort of ask us these questions around, why fintech and blockchain and blockchain crypto at the same time. And I guess I kind of wanted to wrap up with, we don't necessarily see the two as distinct at all. For us, blockchain and crypto is an enabler to fintech, and if there's a fintech project that's essentially going to have a ton of scale and a ton of consumer adoption, blockchain and crypto will inevitably be incorporated in that project at some point or the other. And so we want to be the fund that can help both sides bridge that gap. So we want to be the fund that gets blockchain and crypto projects tons of consumer adoption, and on the other side, help fintech companies make sure that they're thinking about incorporating blockchain and crypto, because that's inevitably going to be the case. So that's essentially the end of my formal presentation. I'm happy to open it up to a couple of questions or even discussion amongst yourselves.
We do have about